to Vanija. Today, we are focusing on a critical but often confusing part of global trade finance, understanding UCP600 Article 17, which deals with original documents and copies. If you are new to trade finance or letters of credit, this video is designed for you. We will break down the rules slowly and clearly. When billions of dollars in international trade depend on documents, how does a bank decide if a document presented is truly an original or just a copy? Discrepancies regarding originals and copies are a leading cause of payment refusal under letters of credit. If your documents are not right, your payment can be delayed or stopped entirely. Our goal is simple: to provide clarity on these requirements so you can ensure smooth transactions and timely payments. We will cover the specific rules set by the International Chamber of Commerce. First, we will establish the context by introducing letters of credit and UCP600. Then, we will dive into each sub-article of Article 17, A through E, using real-world examples. A letter of credit, or LC, is a promise from a bank to pay a seller on behalf of a buyer, provided the seller presents specific documents proving the goods were shipped. The Uniform Customs and Practice for Documentary Credits, or UCP600, are the rules published by the ICC that govern nearly all LCs worldwide. They ensure standard global practice. Article 17, titled Original Documents and Copies, is where the rules for the physical presentation of these documents are defined. This is crucial for compliance. The purpose of Article 17 is to bring clarity to whether banks should accept an original document, a copy, or a mix of both when specified in the letter of credit. UCP 600 provides the framework for LCs globally. Article 17 specifically sets the standard for acceptable document presentations regarding originals versus copies. Now that we understand the context, let's look at the foundational rule in Article 17A. Article 17A states clearly, at least one original of each document stipulated in the credit must be presented. This is the basic minimum requirement. If an LC requires a commercial invoice, even if the bank receives 5 versions, at least one of them must be an original for the presentation to be compliant. This leads us directly to the next key idea. How does a bank actually determine if a document is an original? This is covered in sub-articles B and C. Article 17B instructs banks to treat a document as an original if it has an apparently original signature, mark, stamp, or label, unless the document explicitly says it is not an original. Think of a bill of lading. If the shipping company's agent signs it by hand using ink or applies a unique, identifiable company stamp, the bank will accept it as the original. Article 17C gives banks flexibility. They accept a document as an original if it appears to be manually created, is printed on the issuer's distinct stationery, or if the document explicitly states, "This is the original." Now let's explore what happens when the letter of credit specifically asks for copies, according to Article 17D. Article 17D is quite flexible. If the credit requires presentation of copies of documents, the presentation of either originals or copies is permitted. This prevents unnecessary duplication if an original is already available. For instance, if the LC asks for a copy of packing list, presenting the actual original packing list is compliant. You are not forced to make a photocopy if you have the original. The last sub-article, Article 17E, deals with requests for multiple identical documents, often confusing new practitioners. When terms like in duplicate, in twofold, or in 2 copies are used, this means the requirement is met by presenting at least one original, and the remaining number can be copies. If an LC requires the insurance policy in 2 copies, you must provide one original insurance policy and 1 copy. The word copies in this context means sets of documents, not literally just photocopies. We have now covered all 5 sub-articles of UCP 600 Article 17. To recap, Article 17 ensures that for every document required, there is at least one original. It also provides clear guidance on how banks identify an original and offers flexibility when copies are requested. Understanding these exact rules is essential for strict compliance. This knowledge helps you prepare flawless documentation, avoiding costly discrepancies and ensuring your trade payments proceed smoothly. Thank you for watching. If you found this explanation helpful, please let us know by liking this video and subscribing to Vanija for more clear, methodical content on trade finance. If you have any questions about Article 17 or specific document scenarios, leave a comment below.